In this video, we're going to be going through the top 3 stocks we're looking at investing in this week. Now, it's not extremely oversold, so we're not getting a perfect or great entry if we're looking at it right now, but we are below fair value. Looks like it's going to pull back, so we're going to cover it now, but we may actually be a bit more patient on it. But again, we'll go over where we're looking to kind of enter on this. But what we can see is the 52-week low is at $84. We're right now at 91. So what I'd really be watching on Disney, anything, if we can get it below $94, that is considered a good buy, at least looking at it from a 6-month and 1 year out perspective. So anything below that value is a relatively good buy, and obviously we're below that as of right now. So right now we do have a support around $90. So this is really what I'd be watching for in Disney. And again, if it's something you really want to get in, you don't want to be so patient on, I would kind of wait for that pullback down to the 90. However, if you can be a bit more patient, and probably what I'm going to do is kind of wait for the test of this level. Hopefully we can break it, and then kind of wait for a push down to that next deviation level, which in this case will be 86. But again, we can get in a small size here because we're likely to get a potential bounce. We got a bounce here before. So if we come into this level again, we can look to get some size in there. And then what I'm really waiting for is a break lower. We can crack that 52-week low and look to get in even more size, potentially just below that $84 mark. So in summary, again, Disney, pretty good. Again, do your own due diligence to make sure the long-term fundamentals make sense to you. But from a technical standpoint, anything below 94 is where I'm looking to buy. Where we currently are now is obviously below that value, so a good buy. But what I would be more patient for is a move to 86, and if we can break that, then potentially more around $84. Now we're looking at UnitedHealth Group. Now this is down quite massively in the last kind of few days. Reason for this is you saw this on a lot of stocks like UNH, you saw it on CVS, anything that really sold insurance on health insurance. And that's just because premium is expected to be elevated because people are taking a lot more non-urgent surgeries. So we're having kind of that catalyst to the downside. Now we're pushing to the downside. Is it a stock we want to be taking long bias? Again, you're going to have to do your due diligence. These are just going to find us good entries, but you have to make sure you do your overall due diligence if it's going to be a long-term hold. Like this most probably will be if you're looking at it from an investment standpoint. Now what we can see is we did come down to 450. This was our first deviation. We got a bit of a bounce off here, came to fair value, and now we're pushing back down. Now this can be quite good from an investment standpoint because yes, we could get in now. We're getting in at a good value. We're getting down. We're getting it from about $15 cheaper than the fair value area. So right now we are at a good fair value. But considering we've hit this resistance, we're coming back down. I potentially will be a bit more patient, wait for another retest of this 447, potentially get some size there, and if we can break that, then we're just really looking to those next level downs, which would be the 432 and the 423. So usually how I look at more on the investment account is, again, I don't mind averaging down more an investment company if I know the overall fundamentals of the company are strong. I don't really want to be investing in the companies that are pushing up right now, and the reason for that is, again, I want to be buying those oversold companies and potentially selling them when they're overbought. So again, there's probably only 100 companies I'll hold. Well, I don't hold 100 companies at once, but probably a potential 100 companies or so that I'll be looking at. Ones that have proven themselves. You've got UNH, you've got Disney, Target, any of these long-term, Walmart, any of these long-term companies where most people are going to be holding them anyway. They're the ones I'm looking to buy when they're oversold. I don't want to be buying them when they're at their highs. So we're seeing that on UNH now. So again, potentially looking for that first size around 448. If we break that, 433, and then 423 if we pushed even lower. So those are really going to be my next 3 kind of key investment levels to be paying attention to. And on to the third and final stock. This is going to be AT&T, ticker T. What we can see is obviously most recently they have had a massive decline in price. We did catch it long in this low. That was more from a trade perspective, trading that to that target. Now we have tested, or we are testing our first deviation once again. We're struggling. We tested it here. We're testing it kind of again, and now we're failing. So what I'd really be waiting for, yes, we're below fair value now. Fair value is at around $17.50. So, from current price, we're still getting a 10% discount from fair value. So I already like that to be buying in, potentially looking to get some in as of kind of fair value, or as of current value. But what I could also be doing is being a bit more patient, waiting for that fall in price, waiting for a move to 14.85, looking to buy in there. If we break that, $14.50, $13.40, $13. So these are the key levels I can see on the way down. So what it really means is, again, if we're looking at this from an investment standpoint, is do we want to go full size now, or do we kind of just want to keep buying it as it falls, and if it starts to kind of bounce in the meantime, again, we'll just throw the money in the other stocks. That's usually how I would tend to look at investment accounts. Is, again, I don't have to get into it today. I'm not selling them for, at least a year, maybe 5-10 years out. So I'm not forcing to get in a dollar, a dollar higher than I could. So potentially I'll probably be waiting for that move down to 14.85. Getting in that next size around 14.50. Let's say they hit and I've still got some money left to put into AT&T, but we start to bounce. Then again, I would be looking at $13.50, $13. But if we don't hit it, I won't be throwing it in there. I'll be throwing it in another stock in the meantime until we can get down to that level. So those are the 4 key levels I'm paying attention to on the way down that I'm looking at long bias on AT&T. But again, make sure you do your due diligence before you're buying into any of these companies, because again, if this is an investment, you want to be understanding the fundamentals really do matter. Thank you for watching. If you enjoyed the video, you will probably enjoy this video too.